So I think your last statement has answered a lot of my questions I was going to ask. But for the magic formula backtest, I would like to know the more details. So one is you said the rebalance is once per year?
Yes.
Okay. So how does the backtest deal with the survival bias?
That's a good question. So the database that we use, CompuStat, keeps companies that have failed in the data. So if it failed in 1975, the backtester would have bought it in, it could have bought it in 1974 because the data remains in the database. So we do a number of things. In quantitative value, we outline in some detail the process that we go through to backtest. Basically, we do a number of things like we lag the data. So one of the problems that you have is that you have this look-ahead bias, which is the possibility for trading on information that you don't already have. So and in addition to that, you have this January effect, which is quite pronounced. So there's some tax loss selling at the end of the year. And then if you invest, assuming that you can buy your entire position on the very first day of January, you capture quite a bump in performance. So what we did is we rebalanced the portfolios on June 30.
Okay.
And we used data from the preceding December. So we used the K data and we rebalanced in June. So we were avoiding that January effect and we were avoiding the look-ahead bias. And then we use a very good database. So
the basket is about 30 stocks in the basket?
It varies. So depending on the size of your universe, the universe, and depending on the size of how much you're investing and how much time you want to spend doing it, the fewest stocks that you could possibly do it with might be 20. Okay. And the most stocks, you really don't get much benefit beyond about 30. So somewhere between 20 and 30 is the appropriate size for a portfolio, equally weighted. And that also means that you can buy them on a quarterly basis. So you might buy, if you're buying 20, you buy 5 on a quarterly basis. And then you rebalance those 5, 12 months and 1 day to capture the tax effect. Or does that make sense?
Okay, yeah, thank you.
So if more people use the same strategy, wouldn't your strategy just be equals to the market?
Possibly, but Joel Greenblatt wrote that book in 2006. The magic formula doubled the return of the stock market last year. So the magic formula has continued to work. And the reason that it continues to work is that there aren't that many value investors out there. It's a niche strategy. And within that niche strategy, the deep value investment is a niche strategy. Most guys who are value investors would try to emulate Buffett. They're franchise type investors. There are very few guys who are really deep value guys. And there's also this problem that you'll find, and if you look at the data, I'll give these positions away for free on theacquirersmultiple.com, and you can go there and you'll be able to see they're quite frightening positions. You'll be buying very cheap iron ore mining companies. You'll be buying very cheap oil and gas companies. A few years ago, you would have been buying for-profit education. They're frightening to buy, and that's the real thing that drives the returns. That's why I went through that part of the presentation that says you have to follow the model. That's the most important thing. Without fear or favour, you can't cherry pick, because what you do when you cherry pick is you do what everybody else does, and you avoid the things that generate the really big outperformance.
Okay. I got a follow-up question. Have you tried the same strategy in different markets?
Yes. Okay. Yeah. So the magic formula works. And I discussed this in Deep Value, but the magic formula works in Japan, it works in the UK, and it works in Europe ex the UK. In each of those instances, the acquirer's multiple alone outperforms. The only place where that hasn't happened for the period of the data that we examined, which was about 14 years, because there just isn't that much international data. But Japan, the magic formula seemed to outperform the acquirer's multiple alone in that one single region over that 14-year period that we examined.
Hey,